Luke Beckman from Central Valley Ag is our corn and soybean market analyst this week. The 2017 American corn harvest is past the halfway mark. The latest progress report from the U.S. Department of Agriculture shows farmers are 54% complete, although that's 18 points behind the country's 5-year average. Soybean growers are 83% finished with harvest, only a point behind their normal pace. We talked with Luke Thursday morning and began by asking for an update on progress and a look at early yield results.
Well, I think in Nebraska, we've got the soybean crop put away. Yields sounded pretty variable, just depending on where you were. There were some good things out there, and maybe some yields that disappointed. We look at the corn crop. I think we've moved past the halfway point. We're starting to see some guys start to finish up. I think you give it another week to 10 days, you're really going to capture a lot of that, at least in Nebraska.
Outside of Nebraska?
I think the harvest pace is not a concern of the market. I think we're moving along pretty methodically. You look at what the weather forecast looks like, and there's really not a lot of concerns that we're not going to get this crop taken out.
Analyze for me the recent market movements or lack thereof we've seen in corn and soybeans.
It's been quiet. I think the soybean market's been encouraging. You look at the technicals, and the soybean market's kind of bounced off an uptrend here early this week. Some key moving averages held. So I think that paints a pretty good picture in the bean market, especially when you tie the fundamentals into that and understand that China has a lot of beans to buy yet. I think that's going to give us some good commercial support in beans, especially as we get into the early stages of the South American growing season. The soybean market probably paints a good opportunity to see higher prices this winter. Corn, very sideways, very quiet. We're just awash in the feed grains basically across the globe. So nothing going on in the corn, very stagnant.
Describe the conversation you have at this point in time with your customers now that they know pretty much what they're going to have for production this year.
That's absolutely right. They've received that feedback. Yields are feedback, and they know for sure what they have. That really gives them an opportunity to figure up that final break even. We know what our costs are. We know what our production was. So what do we need out of this crop to be profitable to pay our bills? So that's really been a conversation, is what type of revenue can you create knowing what you have for a yield? At that point, you can really start to look at, well, what price do I need to sell at? This market continues to be supply driven, and when we have a supply driven market, we have good carry built into futures prices. So if you go look at a bid sheet today, you're going to notice that there's a better price for next summer than there is right now or even this winter. So the market is offering you an incentive to carry grain. So grain storage is going to be full, the bins are going to be full, and if you have open grain, the only way to take advantage of the incentive that's out there is to sell something. And so, if you're a producer that, maybe has 10, 20% of your crop marketed and the rest is open, you really have an opportunity to maybe lock some margins up, but you have to step out into maybe next summer and make a sale. But if that's a profitable sale, why not do it? That's really been a lot of the conversation we've been having.
In that conversation, how do you talk about basis and how you think it will move as we close out 2017 and the 2017 harvest and move into 2018?
I think that the windstorm that we had towards the tail end of October threw a little bit of a curve in the cash grain market. We definitely lost some corn in our geography. And so what I think that does is, when there's this much carry in the market, ethanol is demand, feed is demand, and exports are demand. Well, so is space, right? So we have all this grain storage capacity on the farm and in the commercial system. Those elevators, the farm space is going to want to be full. So if we've taken a little bit of the crop away with the wind, I think you see basis stay steady to want to firm, to make sure that we've filled all that space. So as we get into post-harvest, I think the market is going to have to take the incentive away from what we just talked about. And in order to do that, you're probably going to see the futures spreads start to firm or come together, and basis is going to have to do a little bit of work to start getting grain to move again.
Corn and soybean exports for so long had been so strong, and now we've seen them start to lag off. We'll get numbers for September next week. Describe how weak they've been.
Well, it just really goes back to what South America had for a crop last year, and it's kind of like we've known this for a long time, that the South American book was going to cut into U.S. exports early, in our harvest season. So soybean export sales, soybean export shipments are down 16% on sales, 3% on shipments. the corn book's quite a bit worse. So that's going to pick up. It's going to catch up a little bit as Brazil and Argentina go away for a while. But you have to remember the USDA is expecting exports to be up, this year versus last year. Corn's expected to be down quite a bit, but still you have to be a little bit concerned about exports going forward.
USDA's November crop report is next week. Do you have expectations about what the agency will do?
Yeah, we are starting to see some private information come out. I think we would expect the corn yield to go up. It's gone up the last 2 months. An old adage, big crops get bigger. So we would expect the corn yield and production to go up next week. Soybeans are a little bit tougher. They've been a little harder to figure out. If you recall, a month ago, the USDA actually brought the yield down when everybody thought it would go up. So I think there's a few more question marks about the soybean market, which again is going to paint maybe a better opportunity for the bean market going forward.